Good morning, everyone, and thank you very much for joining me. This is the morning market review. It is Tuesday. It is the 20th of February. My name is Russell Shaw. I'm a senior market specialist at FXCM. And before we get into the live stream, let's just go ahead and bring up our disclaimers. So we'll start off with the high risk investment warning. I'll leave this on screen for a few moments and let you take a read of that. Just a few more moments and then I'm going to bring up our market commentaries disclaimer. All right, here we go. Here's the market commentaries disclaimer. If you can have a read through that, I'll leave that on screen for a few moments as well. Hey Raj, good morning to you and welcome. All right, so let's take a look and see what's happening on the markets. Yesterday, perhaps a little bit of a quieter day. It was a public holiday in the US, President's Day. So perhaps a little bit more movement today. Hey Anna, good morning to you and welcome as always. Let's go ahead. Let's take a look at the real rate. Okay. All right. Let's get rid of the bottom, which is the S&P 500. So what have we got here? Let's go down to the daily. Instead of looking at the weekly, let's take a look at the daily and get some sort of feel for what's going on the real yield. Hey, Super Trend. Morning to you. All right. So you can see sort of the flat line yesterday from the public holiday. What we have here, just to start off with the RSI above 50. Okay, so it's on the bullish side of our indicator. The longer it stays on the bullish side of 50, the more likely that the positive momentum influences the real yield. Now, as we said yesterday, my expectation, and this is subject to correction, it's really going to depend on the data that comes out, but basically over the course of 2024, I would expect the real yield to effectively start moving in this sort of southeast direction. But Raj brought up a really good question yesterday, and he said, well, how are we going to know when that's... Hey, Kim, good morning to you. How are we going to know when that's going to be the case? And the idea here is that we have got to see the RSI dip below 50. We also on the weekly have to see that reference candle reversal, don't you? And the idea here is what time RN? What time am I in? I am in GMT plus 2. Okay. There is a movement to the downside here. Is this going to hold or not? So the idea here is the real rates are a key driver of the market. We're going to take a look at that in more detail in a moment. In terms of the news out today, I think if anyone's trading loony pairs, just be careful. There's going to be some inflation data coming out of Canada later in the day. We're going to get the FOMC minutes tomorrow. Now, if the minutes are hawkish, I think that's going to support the real rate. And if that's going to support the real rate, then the idea here is it probably supports US dollar. That means puts pressure on the majors against the US dollar. And we're going to get NVIDIA's results out today. So we're going to get a huge number coming out today. I think it's going to be a good number, but I mean, again, I'm going to just tag on my favorite phrase, subject to correction, right? And I wonder if that's going to carry on supporting the market, or if that's going to prompt some sort of take profit. Okay, so let's go ahead, take a look at the S&P 500. Let's just try and put some sort of cohesiveness towards what we've been talking about in terms of the real rate. Hey, Katie, good morning to you and welcome. All right, so a little bit of, I'm not going to say respite, but perhaps some sort of resistance coming in over here for the real rate. Is that going to support the stock market? Let's go ahead and take a look at that. And I'm going to click this plus button here. And what I'm going to do is I'm going to put in the S&P 500. I'm going to bring that in underneath. Okay. Now, this is kind of what I'm thinking. Okay. And of course, go ahead and type in the chat if you have other thoughts. But the earnings has been driving stock market up. And at the same time, we have seen the yields move up. And I don't think that is overall a sustainable type of market manifestation. The idea here is that interest rates act as a headwind when they are rising on risk markets. When the yields are moving up, best way to think about this, let's just think about it in terms of income statement. In the income statement, there's a line item called interest paid. As the yield increases, your interest paid expense moves up. That's a drag on profits right there. It's just sort of a very simple way of looking at it, right? So let's go up to the weekly. Let's go up to the weekly. And you can see here, this is what we suggested yesterday, is that you've got the interest rate moving up. That interest rate moving up puts a headwind on the stock market. That makes sense. It comes down, okay, into the end of last year. That provides a tailwind for the stock market. Stock market moves up. So far, so good. Okay, so far, so good. Where it gets tricky is right here. So when we're looking at this blue, okay, what we're looking at is this vertical blue. And what's happening is a contradiction. It's an anomaly. Well, yes, to be quite simple, Anna, it's a contradiction. Stock markets are ignoring the increase in yields. And the question, and this is a key question, and I don't know the answer, okay, but how long can stock markets ignore the increase in yield? And my opinion, is that at some stage it has to catch up with the stock market. Okay, so you can see that here it's moving up and here it's moving up. It kind of loses that correlation. So yes, I think that it is anomalous. I think it's anomalous. How long can it carry on? So we've got some important things happening in the stock market. We're getting NVIDIA's earnings out. I think this is kind of the pinnacle, the apex of earnings, right? What's really been driving markets, yes, we've had great earnings. We've had really good earnings this season. But there's also been behind that AI story. And of course, the granddaddy of all AI stories is NVIDIA. So we're going to kind of see how the market reacts with the NVIDIA results. And then we're going to see if that triggers some sort of profit take. Let's take a look at NVIDIA. Let's take a look at NVIDIA. Okay. No, wait a second. Let's hold Let's hold that thought. Let's just go through back to the SPX 500. We've looked at this. Okay, we've looked at this. Not yesterday. I think we looked at this last week. I'm sharing the tab. You should all be able to see the S&P 500. Now, let's just try and put something cohesive together. Let's just try and put something cohesive together. Okay. The idea here is, okay, we're getting higher interest rates. So that's that headwind at a time when the market is overbought. The Magnificent Seven are cash rich, so they can afford higher rates. That is true. That is true, but that's not the full story. That's not the full story. Remember, okay, that there is a mathematical construct, a mathematical relationship, permutation, which runs through the markets. And that mathematical formula is called the time value of money. Okay, so what we have here is that we have, yes, they can afford higher interest rates, but the fact is higher interest rates, number one, are still impacting on profits. That's going to flow through to cash flows. That's going to flow through to valuations. What happens if the valuation too high and needs to moderate? What happens if the movement up in the interest rate puts the pressure on that present value? I don't think, now listen very, very carefully, I don't think that we are changing trend. The trend is up. We are in a bull market. We are in a bull market because earnings are good. The US economy is growing. We're getting a moderation in inflation, and a moderation in inflation. And all important is we are ultimately, listen to this, ultimately, I think we're going to get some sort of respite in the interest rates. But, and this is the big deal, the big deal is that interest rates were priced into, interest rate cuts were priced in for March. That's no longer the case. Interest rate cuts were priced in for May. That's no longer the case. We're now looking at June as the earliest time for an interest rate cut. What's the big deal? The big deal is as we were moving into the end of 2023, the market was discounting, it was pricing in the fact that we were going to get a March interest rate cut, that we were going to get an interest rate cut in May, and we're going to get an interest rate cut in June. That's no longer the case. So there has to be, one would expect on a logical level, some sort of repricing. Does that make sense, Anna? So yeah, I'm not saying that the Magnificent aren't cash flush. The fact that they're cash flush means that we can make discounted cash flows. We can value the company. But that valuation is not a static number. It's a dynamic number. It's changing every single day. Okay. So what we have here is we've got this very obvious overbought condition at a time interest rates are moving up. It's making me worried. I don't know when it's going to normalize, but what I can say is it will at some stage normalize. Be careful. Let's just bring up NVIDIA. NVIDIA results out today. Let's just bring that up. Yeah, and that's the point, Anna. I think that we may be heading for some sort of correction. I think we may be heading for some sort of correction. Now, if there is a correction, I think that the dip in the uptrend is going to be exploitable. That's going to be a whole new topic of conversation for future live streams, because I think that is very much a case. But if you take a look here, we can see NVIDIA's overbought as well, right? And what we can do here, let me just see. It's going to be quite difficult. Let me see if I can. I'm going to put trend lines in. I'm cognizant of the fact that the camera's blocking some of the chart. I'll correct that in a moment. I just want to Okay, let's move this camera out of the way. It's too far back. I don't want to go this far back. Let's just go through to the daily. Weekly. All right. Let's just try do some trend line analysis. Yes. Katie, you asked for NASDAQ yesterday. We ran out of time. I'm so sorry. I forgot about that. Okay. Let's just put NASDAQ underneath. What we can do, look, let's add also a correlation coefficient here, KD. So this will be interesting. So let me just plan my next steps because I don't want to be all over the show. I want to do some I want to do trend line analysis on NVIDIA in a moment. But Katie has just introduced a good sort of topic of discussion. Let's just take a look at NVIDIA with NASDAQ. Okay, and watch this. Let's go to indicators. Let's go to indicators and let's just add in a correlation coefficient. Okay, so just we'll type in correlation coefficient. And what we want to do here is we just want to change the symbol to NASDAQ 100. We're just using the FXCM instrument, but that's fine. It's a proxy for NASDAQ. Let's just pop that in and click apply. Okay, this is super interesting. Okay, so just to explain how the correlation coefficient works, just for guys that are listening that haven't sort of been part of our webinars or live streams previously, the correlation coefficient oscillates between +1 and -1. So those are the borders. +1 is effectively 100%. -1 is effectively -100%. And what happens is the closer something gets to 1 or 100%, the more correlated they are. So here we can see that we are extremely positively correlated. If I have to go to labels, let's just put in the label indicator value. And we had 88% here, KD. Can you see that? It's an exceptionally strong correlation. So we're very close to 100%. So the NASDAQ and the and NVIDIA basically are moving in lockstep, pretty close to 100% and are at 88%. So if there is a support for NVIDIA, given that it's been such a strong story in terms of technology and artificial intelligence, that would flow through to NASDAQ. If there's going to be some profit taking on the NVIDIA shares, that will flow through to, one would expect, to NASDAQ as well. Can everybody see that? I hope everyone can see that. All right, I'm going to take the correlation coefficient out. And let's just do some trend line analysis on the on NVIDIA. And basically, to do trend line analysis, you need to be on logarithmic. Okay, if you're doing a sort of a longer term type of analysis. So what we can do is we can just kind of connect these two guys. I'm going to change this, and let's make this a line, and I'm going to change it to green. So we'll make it like a traffic light. Okay, so green is kind of your safe, you can go. The next line we're going to put in here will be orange. It's kind of your amber, and that will kind of be your warning. So let's put this in as amber, right? So you can see we've got a shift up in gradient from green to orange. And then what we've got to just be careful of here is when we get the movement to red. So the movement to red would be corresponding to an overbought type of condition. So I'll just change this to red. When you get 3 trend lines on a logarithmic basis, it's unlikely that the gradient can hold. Remember, gradient is the change of y over the change of x. It's basically your change in price over your change in time. In other words, price is moving so strongly given and so fast, it's moving so strongly and so quickly given the x-axis, which is time. So, I mean, we've had, I think it's 50% in terms of capital gains in NVIDIA in less than 2 months. It just seems that profit taking is something that must be considered, even though the demand for NVIDIA chips is sort of out of the park. So I'll be very interested to see how the results affect price. We may have the forward guidance may be so impressive that it actually leads to further price gain. But what I can say, the further out we go in terms of this overbought condition, the more severe the pullback in terms of the profit take is going to be. We've seen that in Bitcoin previously. At one stage, Bitcoin on a weekly basis stayed overbought for about 6 months. There was so much emotional attachment to Bitcoin that by the time the normalization ensued, there was just a rampant decline in the Bitcoin price. So we want to just be cognizant of that. And it's typically technology and these new stories that really capture the market that can attach themselves to market emotion. So we just got to be very careful of that. Having said that, and this is just kind of where I think we should end for the session, I still think that we are in a stage 2 of a bull market. What's stage 2 of a bull market? Well, it goes back to Dow theory. Charles Dow basically said there's 3 stages of a bull market and there's 3 stages of a bear market. And we'll just go through the 3 stages of the bull. So we've got stage 1 here, which is called renewed confidence, the renewed confidence stage. That's sort of a very stealth market. That's where the pros are really getting bargains. And then we move into what we call the improved earnings stage. And I think that's where we are now. Improved earnings, we've just seen absolutely terrific earnings. But the fact of the matter is that there is a headwind in terms of the real rates, which is increasing. But I think that's within the confines of stage 2. And then stage 3 is what we call rampant speculation. I don't see any signs of that. It kind of moves parabolic up. It's the time when most money is made in the markets. It's also the most dangerous times to be in the market. But my expectations, and again, I'm going to just tag on subject to correction, is that I think we're over here in kind of a stage 2 type of environment. I don't see the kind of speculation. I mean, NVIDIA's up 50% in 2 months. But when I'm talking about a general frothiness that's obvious in the indices, I don't see that. Let's just see what Anna says here. Yeah, well, that's my feel as well, Anna. I think you've kind of hit the nail on the head there. Look, you can see. Let's just go through to labels. I want to just take the values out. So all we've got now, all you can see here is let's take NASDAQ out. So now we're just looking at NVIDIA, and NVIDIA is currently trading at $726. I did read an article. One of the analysts on Wall Street has upped the target to $900. And they've put in kind of a discounted cash flow, and they've looked at fundamentals. I'm not saying that it could be. I'm not saying that it's without flaw. I mean, clearly it's based on assumptions, etc., etc. But the fact is that there is still scope to go in terms of what Wall Street thinks the fair value is on NVIDIA, but I think that it doesn't move in a straight line. It tends to zig and zag, and I think it's probably getting close to time to zag. So just be careful out there. Be very careful out there. In terms of the results and the forward guidance, just how valid an analyst report is that gives a target of $900. You know, I mean, it's quite rich. I think we can all agree to that. All right, I think that's as far as we will go this morning. If there's any questions, go ahead and type those in. Of course, as always, I'm going to request, if you found this useful, just go ahead, click on that boost button, which just helps with the dissemination. But only if you found it helpful. If you didn't find it helpful, don't do it. But I do want to wish you guys a good day ahead. I want to wish you guys a good evening, and we will do it all again tomorrow morning, and we'll have more information with regards to NVIDIA. I don't see any questions coming in, so let's conclude at this point. Thanks very much, guys. Much appreciated.